Hi guys, this is Simon with Trade and Perform Coaching doing the trade review for today. The date is the 22nd of October. And so a very interesting day. We had a little bit of back and filling through the end of the day. And so when we came into the day, we always have a couple concerns. First of all, there was no gap down. And then looking at a larger picture, which I want to do really quick here, right? See if I can do this gracefully and without causing much delay. Okay, so if we look at a bigger picture here, we can see that we've actually trapped in two areas, right? We've trapped back above this area right in here, which was our prior support area, this 1898 to 1892, right? And we sliced through that like ice. But then when we got right back over here, we ended up trapping back above. And then of course we got very hard short squeezed back to the upside. So we actually have two traps going right now. We have this trap right here in this 1920, which we held perfectly today. And if you'll see on the Twitter stream, I had pointed out, I said 1920 was my downside target and was actually where I had a long waiting, except that we didn't get to that till the very end of the day. And I don't, one of the rules I have is I tend not to take trades in the last hour. Why? The market tends to get directional in the last hour. Several of y'all, I'm sure, have seen people get caught and crunched really, really badly in the last couple of weeks and last hour trying to concentrate that. So I have two objectives when I trade. My number one objective is to protect my capital. Number two objective is to deploy it where I have an edge. So in that thinking, originally, had we held below this level right here, had we held below, I would have been looking for a rollover and possibly a retest of the low or even a push to new lows. Okay, but the event horizon, I guess you would say, has changed a little bit. As long as we hold above this 1892 to 1898 level, I really feel like buyers are much more in control. What does that mean for us? Well, that means two things. First of all, if we can hold this backside test down to these lows right here and then push higher, that we still have an opportunity. Right now, the top area of resistance kind of falls right in this area, right in this 1960 area. So I really think if we can either hold this low or hold into the gap, which was right here, this exactly this 1900 area, I would expect responsive buys and possibly now over the course of a couple of days or weeks to push into 1960. Conversely, if we get below this 1892 area, it obviously opens the door. First, we have to get below this support just below around the 1775 area and could open the door for a test lower. But as long as we're holding up here, my assumption is going to be that we are going to find responsive buyers. So how do we translate that into today where the environment's kind of changed, but we're very, very stretched from this 1814 low. We've traveled over 100 points to the upside. Well, the way that we handle that in the room in the morning was what we said was that I thought initially that responsive buyers would actually be the ones to come into the day. Now, would actually have the easier shot, particularly in the morning. Now, with that being said, these blue areas, what they represent without going into a large conversation, is a poorly auctioned area. And the rule of thumb with a poorly auctioned area is that the market tends to be able to trade through them relatively easily, both up and down in the market, right? And this creates a conundrum, right? Because if we truly have a poorly auctioned area, that means that from where we stand to the upside, that we technically could have pushed all the way up to this 1948 level before finding what I would consider a really good clean area to find rejection from. So first of all, in the morning, I felt this downside push could be bought. This was right into an uptrend line if you look from yesterday. And I actually took NQ long to the upside. And then I flipped and took ES short to the downside is how I ended up running that. Now, I've started to be able to record the clips in the morning as soon as I learn to edit them. I will start to post those clips as they go. But if you really want to find out how we handle these in real time, the best thing to do is to ask for a 7-day trial into the room. I'm more than happy to extend anyone who would like an invitation into the room a 7-day trial. So that being said, we took a long here first, we took a short up here, and then the market got real interesting. We kind of started to crunch up here and not go anywhere. And I really think that was a net result of late longs coming in and early shorts being a little tentative to really press their shorts. And we kind of ended it with a standoff. And that standoff ended up, this was our first hour high. And then finally the standoff ended with some people getting short squeezed above the first hour high. This sets up a trap trade. A trap trade, trap trades are seasonal. They work sometimes, they don't work at other times. But and the only way to track them as to whether they're working or not is to keep statistics on them. And as of right now, both long side and short side trades on traps have been working very nicely. So this morning when we trapped here, right, what was my attraction to taking a short? I took a short on actually the close right here. I initiated a short at 1941 1/4, and my stop was actually 4 points above at this. Actually, I want to say 44 1/4 was my stop, just above Globex high. This was actually quite a difficult area to take a short in for a couple of reasons. First of all, I had a valid setup with the trap, but we're in a poorly auctioned area, so my concern is always that we'll push up through the poorly auctioned area. I just felt that we were so far extended that it was worth the risk at that point. You got to remember, I already had one very nice trade off the lows in the morning. I had one very nice short, and also over in CL I had a nice trade. So and over the last 2 weeks I've actually done quite well from a trading perspective. So when we got trapped, and I said this morning, my one key area where I was looking for a long, when I was in the morning, I come in and kind of highlight what areas I'm looking for, and the highest odds locations are marked in orange and red, orange being high odds, red being the highest odds. And I said this morning, this was my target for looking for a long, and what I was really hoping for early in the morning was that actually we would kind of get this test up and then push down in the morning and then push back up into this range in the afternoon and end up with a net balanced day. Okay, and of course the market just didn't do it the way I wanted to do it, and so I had to adapt. So that being said, I got a long, I got a short, and then we got a trap. And people always ask me, well, how do you know that the trap's going to work? Well, I don't know that this particular trap's going to work, but I do know that over the last 2 weeks, traps in general have been working very well. We took the short here, and I was very clear when I took it, if I can find a way to edit it out and post it, and I said, my target was 10 to 20 points lower, and my ultimate downside target was literally 19, 20, 50 was where I was looking to take a long, and that if I could, I was going to attempt to push this trade to the downside. Additionally, if you'll look at my Twitter feed, and I'll see if I can get this real quick, on StockTwits, outside of screaming from the top of my lungs that that CL looked extremely weak, let's see if I can get this here real quick. I had posted that I was trying to pull off a short here. Let's see here. No, this was earlier in the day. You know why? It was on the private Twitter feed. It wasn't on the public Twitter feed. Let me see if I can get that pulled up here real quick. So I use the private Twitter feed. This is my private Twitter feed to send messages out to the members of the live market preview. And I generally stay on through the first couple hours of the day calling out trades. And so if you'll look, this was roughly 9 hours ago. I can tell you that this was roughly 12 p.m. Central Time, right? And so you see a couple of things. First of all, you can see that I called for where my scales were, and you can see I scaled a quarter of the trade at 1935 for +6. I took another scale at 1931 1/4, and I finally closed the entire trade at 1929.50 for, I believe that's 11 points. I think I put +12. It was actually +11 points. 11, just under 11 points. Wait, 31, 30. Actually, I take it back. It was almost 12 points. And just so everyone knows, I'm incredibly dyslexic. I can figure out a chart and chart patterns all day long. I cannot add two simple numbers together to save my life. Never trust my math, okay? But what you'll see in this is at approximately the same time, I put out to the room that I was, first of all, that I was looking to get short at 1935. Again, this is kind of a floating zone that appeared through the course of the day. I missed this fill by about 2 ticks. I was just a hair late, and I never got the fill. And then you'll also see at approximately the same time, I also said I'm looking long at 1920 and a quarter. Now think about the power of that for a second in terms of planning trades and how I'm going to execute. When we're sitting right here at 1935 and a quarter at 12 o'clock, I am already saying that when we get down here because I've already highlighted it in the market plan, right? When we get in here at 1920.50, I will look to get long in that area. What does that do for me in terms of the power of a trade? Well, it does a couple things that Mark Douglas really highlights as being important. First of all, I predetermine my entry, I predetermine my stop, right? And then in that particular case, if I had gotten filled, my exit as well. So Mark Douglas highlights that when you have your entries predetermined, your entry, your exit, and your stop, assuming that you actually have an edge, and I know these zones come from the edge that I have, entry, exit, and stop, okay, that those trades are incredibly powerful for me, okay, because I don't have to make decisions at that point, and I can surrender myself to the education process of watching what the market's communicating to me, right? The second part of what that does is it reduces my anxiety. Why? I already know I'm not going to go broke on the trade. I have a 2-point stop behind the back of the zone. That stop is my friend. It keeps me from getting run over. I don't move it, just like I didn't move my stop on top when I had the short, right? Secondly, I don't move it. Secondly, it lets me observe and learn from all the communication that the market's given me. When you're nervous about a trade, all you're going to look at is the information that is confirming your bias. You're going to ignore any information that doesn't confirm your position because it's too scary, right? The last thing is I already had my exit pre-planned as well out of that, which would have been 5 and 10 points is what I would have attempted to do, or market close, one of the two. So I already had all those decisions made for me hours in advance, right? So there was nothing for me to think about when the market got there except put the order in. The only exception being it was the last hour of the day, right? If you can't, what I want to communicate with that is if you can see how powerful that is in terms of keeping you relaxed, reducing your anxiety, and increasing consistent performance day over day. On top of that, if you look at the zones here, in the afternoon in particular, right? So first of all, let's go from the morning and work our way from there. So in the morning, we opened up into this 1938 3/4 resistance. We pushed out of it for 2 points. Next time through, this zone's already been tested. There was no point in trading here, either here or here, right? First time into, if you look carefully, even though it appears this zone broke, it actually gave 7 out of 8 ticks rotation up prior to breaking this zone. The zone actually worked. If you're looking on 1 minute trade location, you will see that they did get a response prior to breaking. Next, first time into this zone, gave actually from 1928 all the way up to 1935 a 7-point rotation. Again, I was covering my short into these areas, and actually I should have flipped long, and I don't actually remember if I flipped long or not. I was in a coaching session at the time with one of my clients, so I don't remember whether I took it long, but I know that I covered my short here. Okay, I attempted to re-short here at 1935, was unable to get that done. Again, poorly auctioned area. You can see the market pushes through these poorly auctioned areas quite efficiently, and then all the way down into my high odds reversal location, where even at the end of the day, that high odds reversal location held and actually provided a rotation from 1920 and a quarter to 1927 and 3/4. And my guess is that it'll go ahead and finish out to 1930 in the overnight session. Again, I didn't take that last trade of the day, that last trade. It was too late in the day. So what am I trying to communicate? First of all, I have a written trade plan and I have a proven edge, right? Secondly, built around that edge is a plan to extract money out of that trade that has both my entries, my entry, my exit, my stop pre-planned, right? So that I reduce my anxiety as I go through the day. The last part is I'm not worried about whether the market goes up or down. It has absolutely no impact on my trading. As a day trader, what I'm trying to accomplish with this is to kill the boom bust cycle. Now, I can tell you yesterday, I had no trades, right? Particularly in the morning session, I had a few scalps in the afternoon, and I had some trades in CL. But in ES, I could not read the trade action, and this is really important. I said, I don't know what's going to happen, therefore I did nothing. Okay, so did I catch the trend day up? No, but I didn't get run over to the upside. And as soon as we came back to a two-way market, my P&L shot through the roof again. This is Anyone is capable of doing this. Look, I'm a guy with ADD, dyslexia, and I barely graduated from the University of Texas. I graduated, but barely. Okay? If I can learn to do this, literally anyone can learn to do this. And the reason why I learned to do this was after I started my career where I used to trade from the seat of my pants, I realized that this had become more of a chess game and I needed to evolve my game so that I had a written plan. I had entry, just like Mark Douglas, who wrote that book in 1991, my entries, my exits, and my stops pre-planned and always observing the market because I could reduce my anxiety as a learning experience. Okay. All of that adds together for me to not needing anything out of the market because instead of counting the dollars, I'm counting the process. And by following the process, the dollars follow automatically. I don't have to worry about it. It's like worrying about if when you order the food from the restaurant, you don't ask, well, what's each step going to follow so that the food tastes good? You assume the chef knows that. But when the line cook gets back there and he gets the order, right? Step 1, do this. Step 2, do this. Step 3, do this. And they have it down to the science so they know they can prepare the food, get it to the waiter, and the waiter can carry it to the table, hopefully while it's still hot, and you end up getting a delicious meal at the end of the day. While the chef is preparing and following that process, he's not wondering whether the food's going to taste good or not because hopefully he's already done all the work in the preparation process, right? And the pre-planning to make sure you end up with a good meal after you follow step 1, 2, and 3. That's essentially all we're doing with what we're trading here. We're identifying areas where the market's highly likely to get a reversal, right? Where we're likely to get small reversals versus little reversals, and we have a process to follow all the way through. So I hope I communicated that well. I'm pretty tired. It's been a long day. It's been a good day, but it's been a long day. My objective in doing both these videos, the blog, and the live market preview is to help traders move from the frustration of going from boom bust. Plenty of traders have 100% increases in their accounts, only to have 50% decreases, right? That means net you went nowhere. If anything, and for many it's worse. It's just a constant losing process, and it doesn't have to be that way with futures. There is a way to approach the market where you can gain consistency, stop beating the hell out of yourself. Is it always exciting? No. Sometimes it requires that you do almost nothing, right? But it is highly profitable for once you cross that bridge to pre-planning your trades. It can be highly profitable, and it can be very rewarding, and it actually can be fun. Trading can be fun again, even when it's pre-planned, right? So remember, nothing that I say or nothing that I put out on Twitter or in these videos is meant as trading advice. It's meant purely to be educational, right? You shouldn't follow me blindly. You shouldn't follow anyone blindly. Oh, I want to leave one last piece to everyone. What you see on the screen right now is exactly the tools I use all day, except for 1-minute tick divergence that I keep up on another screen. You will not see me with stochastics, Bollinger Bands, ATR measurements, anything besides the purity of what is on the screen, because all you need is, at the end of the day, is trade location, rotation size, a written trade plan, right? And to verify that those trade locations actually give you an edge, which I know for a fact, for me, they do. Okay, so at any rate, anyone is welcome to join the live market preview. All you have to do is send an email to tradeandperform@gmail.com. I will then turn around and I will approve you for our private Twitter feed and for the live market preview, which includes the NQ charts and the ES charts. It's only $95 a month. That's less than 2 ES points a month. And I assure you, I've had guys that have doubled and tripled their accounts in the last couple of weeks. Again, that's their work, not my work, but helping them get the guidance and helping them understand what they have to do in order to achieve those kinds of results, that is my work, and that is what I'm trying to set out as an example to help people specifically end the boom bust cycle. So anyways, my name is Simon. I'm tired. I hope everyone had a great night, and we will talk to hopefully we will be talking to you